Welcome to Java, and thank you kindly for joining me. It is September 8th, 2025. It is Monday. So, first, I hope that everyone had a wonderful weekend. And also, I would like to start with thanking everyone that is here and everyone that supports this channel. Couldn't possibly do this without you. Now, today is going to be a larger episode. So much has happened since last week, even though it was a shortened holiday week. There is a lot to cover globally, not just the macro. So, we'll hit everything from the data to what's going on militarily and including my opinion. So, with all of that, let's get started. We've got visions and revisions. We'll be talking about the CPI and PPI coming later this week. But first, let's get into what's going on in the markets. Now, fear greed meter back down to neutral after last week. Everyone got so happy about how the stock market was going, poured more money in. It dropped on Friday. Now, not just on the jobs numbers, I'll talk a little bit more about that. But today looks to be a little bit of a recovery. So, what have we got? 10-year yield is pulling back up off the ground. It dropped dramatically. 4.094 at the moment, this lowest it's been in a while. So, with that 10-year yield, that means more money flowing into bonds. So, shifting a little bit this morning. We've got the relative strength of the dollar. It is the loser in the basket of currencies this morning. So 97.68, that is the relative strength of the dollar and losing ground as we speak. Now, cryptocurrencies are on the opposite. They are recovering from a bit of a low. So they're in a grind out phase at the moment. We're going to wait and see where they end up, whether Bitcoin can hold that support. But I've got a lot of news as far as the cryptocurrency world. So right now, if we look at this, it's Solana is one of the chains that is the winner in this sector. Now, as we were talking about, stocks took a hit. On the jobless reports, we've got the volatility index increasing a bit. We'll see where that goes because there's a lot of things that could happen today. Now, futures are saying that stocks market got a bit more to run at least this morning, may not continue into the afternoon. And if it does, urge caution on tomorrow, and we'll talk about why, a few reasons for that. So, back to this driver. What happened was United States payrolls, if you haven't heard, you happen to live under a rock, uh, very weak. So 22,000. So the markets, in short, are putting all of their bets into easy money. September rate cut, they're now not just putting the money onto a September rate cut, but also that there's going to be not just two this year, but also very likely three. I still see the case for two. We'll see going forward. There is a lot of weakness in the economy, and they're starting to see some of these cracks. Now, the main reports, and I'll go over the calendars: PPI Wednesday, which is producer price, and the core inflation on Thursday. So, those are the ones that could really skew the Federal Reserve. Now, I would also like to mention there is a massive report coming out Tuesday that will not be on the calendar, and that is jobs revisions. So the revisions could really throw this market one way or another. They have been horrible the past few times that they've come out. They have revised downward, showing much weaker United States economy than what they're letting on. So, with all of this, we've also got some global concerns, not to mention France having their upheaval politically. But now we've got more things happening in Japan again. So Ishba has resigned, he's stepping down, and this is hitting the Japanese bond market. And the yen carry trade is back on because the interest rates, with everything that's going on, is making the favorability to where there's now another cash flow back into that. So, calendar, again, as I said, not really telling the story. Consumer credit today, so Monday today, probably low end movement, not a lot of volatility. But what we've been seeing is a rise in the morning, the first hour or so, and then institutional selling into it. So weakness afterwards. So this is just the pattern that has been going on. Today, it's looking like futures have a bit of strength, at least at the open, but don't fall into a trap. So we've got a lot more things happening globally, and this is on the tax and a little bit more on the political front. But what we're beginning to see is that this is showing more, as we've been saying here, this is a global issue, not just United States. So Greek Premier now offering 1.6 billion euro in tax cuts, trying to boost the middle class. Sweden cutting taxes on food to support. India approving lowering consumption taxes. So the theme we're beginning to see here is that governments are beginning to realize that the people are suffering not just through this inflation, but also through this weakness. And in order to spur this, the easiest, fastest action they can take is tax cuts, aside from absolutely pushing out money to the public. So I would like to go through a couple of market bits. One is ASML, because this is one that a lot of people did not realize. They are the largest shareholder in NVIDIA, backed Mistral AI. So NVIDIA coming out with their own artificial intelligence. This is a Dutch company, Dutch chip company. So that's going to be very interesting and moving this morning. Now, Greg came out with this, is from him, and I happen to agree with it for the most part. These are the three likely scenarios based on the current dynamics that are in play. So if you are not subscribed to his, you probably don't get this. He put this out in his newsletter, which comes out, I believe, for free, but he's on Substack now, but you have to be a subscriber. You get 7 free days. However, I thought this piece was good, so I'd like to share. It's either the melt up crack, 50% chance is what he's putting on this, next 6 to 18 months. I probably put this one at 60. Rapid transfer of wealth right up to the 1 and 2 percenters. Second scenario is kind of a grind out, managed plateau, and this is a 30% chance. I kind of agree with that. So sideways to upgrind for stocks, inflation rising faster, and continued hollowing out of the economy, US industry, and the middle class. So in short, this is to push that stocks can maintain higher price, as well as gold, Bitcoin, and other assets, because that is simply inflation taking place and the weakness of the dollar. So I believe this is going to continue for some time prior to the melt up and crack, and then a disorderly break is the other one. And he's saying bond market seizing entirely. This would be the credit markets. Once they break completely, stocks gapping down dramatically, purchasing power collapses. In other, in other words, this is the, in short, basic stock market crash that people are talking about. Complete shutdown, and the new system, which we know will be in the format of digital. So I posit that all three of these are correct at different points in time. I believe that's first going to be the second one, the managed plateau, for some time. And then we're going to have the melt up coming sometime soon. 6 to 18 months seems a reasonable timeline. I believe might be even sooner than that. And then the break. So just wanted to share that with you now. A word on where this is going to the digital, regardless of either of those three, we are headed this direction. So Putin's advisor, Kobyakov, came out and said very clearly the United States has devised a crypto scheme to erase its massive debt at the world's expense. I completely agree with this. And he detailed this as he came out, and he pretty much, it's a little odd to see Russia coming out as the truth teller. However, I would like to just kind of read his statement as follows, saying, the US is now trying to rewrite the rules of the world of gold and cryptocurrency markets. Remember, the size of the debt is $35 trillion. These two sectors, crypto and gold, are essentially alternatives to the traditional global currency system. Washington's actions in this area clearly highlight one of its main goals, and this is to urgently address the declining trust in the dollar. As in the 1930s and the 1970s, United States plans to solve its financial problems at the world's expense, this time by pushing everyone into the crypto cloud. So over time, once part of the US national debt is placed into these stable coins, Washington will then devalue that debt. Put simply, they have $35 trillion in currency debt. They will move it to the crypto cloud, devalue it, and start from scratch. That is the reality for those who are so enthusiastic about crypto. I've been saying this for some time. It looks like this is the preferred method. They have to do a revaluation when all of this comes down. So, with them moving it to the crypto cloud, I think that he has pretty much hit this clearly on the head. So, what do we see as evidence of this? Ethereum adding $1 billion of stable coins almost every day last week. Ethereum is currently the preferred chain for all of this to happen on. So, what could happen in the event of massive hyperinflation? Well, we only have to look as far as Venezuela. Now, they just went through this and they're using Binance dollars. So, these are in short from the exchange BNB dollars, replacing the Bolivar. Their inflation 229%. So, whether you want to call that inflation, hyperinflation, or superinflation is only a matter of degree, and it is only a matter of wording. So we've got blockchain based identity can help. HR, this are those in charge of hiring, navigating artificial intelligence generated applications for jobs, because the jobs are really the underpinning of what's going on here. And I believe this can be a good thing because it can help people remain anonymous if they use decentralized blockchain for the validation, just like they do with the encryption. And they don't have to be on these massive centralized identification databases that they have. So I've got another alarming thing other than Tuesday. When they revise the jobs numbers, that's the number one thing to look out for that is not out there on the calendars. This is the second. A closed extraordinary BRICS virtual summit will be held today. No statements will be issued afterwards, according to a Kremlin pool journalist. Now, we all know also that even though they have no statements and they don't let any of this out officially, someone always knows. So we're going to be seeing this. So if something significant happens, we're going to be watching the stock market move. Now, a couple of other things. There were multiple, not just one, but multiple undersea cables cut in the Red Sea. This disrupted internet access in Asia and the Middle East, right off of Saudi Arabia. Now, all of these affected millions because this, in short, took down Microsoft's main servers that were in that area. So they were able to route around them. They do load balancing, but it did slow down their traffic and hit them. So a lot of speculation on this, but this also plays into all of the other stories. So I want to bring up a couple of other things since we're talking about we have three fronts going on now for these wars. We've got the political wars that are going on, and these are all of the discussions, and those lead into the tariff wars, which are also leading into the currency wars. So these currency wars, which we just spoke about, lead into the physical kinetic wars. And now with these, we've got a couple of developments. The first is 20 kilowatt high energy laser systems to engage aerial threats delivered to the United States Army. Now, I want to bring this up for two reasons. First, so they've got the nickname AMPHEL, and this is for these high energy lasers, what that stands for. But this vehicle that you see here that just got a massive contract is built by General Motors. So through the defense contracts, the United States government, again, is using the taxpayer to subsidize corporations and just, in short, companies that are in trouble and giving a boost to sectors very quietly in the background. Now, I also wanted to just kind of show you this one. This is the T-90, and this the Russian uh, tank. They call them their battle beasts, heading out to the Nevsky Brigade. And I find it a little funny. They paint both of them green, but they're for fighting in the desert. A little off on the color. However, with all of this, I wish you a wonderful trading day. This has gone on a bit long, but so much going on. And until I see you again, my friends, resist.